What do you do in this kind of an environment? I mean, you know that the long-term picture is intact, but in the short term, when the pain is so excruciating, just hold on to your positions, or you may be forced to rethink your basic strategy, looking at how risk is now getting adjusted.
So Nikunj, unless you are a trader and you have to sell, I think it is crazy for investors to react in this kind of market and sell anything indiscriminately, right? Because there is no point of selling into the fear. And as I mentioned, that if you go back in the past and look at events like this, typically on the whenever these events wind down, the markets typically tend to bounce back, right? So I think unless it is absolutely necessary, it is actually counterproductive to sell into a panic like this. Whether you want to buy or not is entirely up to the investor's risk appetite. But I think that if you want to buy the fear, you should stick to large caps, high quality names, and then let the dust settle down, and then you could then venture more into the market. But that's what I would.
Yes, it's a good time to invest when things are down. Of course, that doesn't mean that things are not going to go down further, but still, now is a good time to start thinking about seeking the best bargains. I'm talking about a long-term bull market in India is certainly not over. There'll be corrections, there'll be problems along the way, but the bull market is not over, that's for sure.
I think the way I see is whatever the bullishness that there's been existence for the last 1.5 years, driven by the stimulus, also expectation of growth coming back, and corporate financial numbers coming back. All those things, while it remains the same, clearly I think the geopolitical risk is creating some amount of uncertainty. Of course, historically, if you look at the market always makes money only if one buys an uncertain period, and current volatile period, I think is likely to stay for some time, given the fact that oil price is now touching close to $100. It'll keep the commodity price volatile, the news flow is volatile, and the market will continue to correct maybe about 3-4% here and there. From an investor's point of view, clearly there is absolutely no doubt when there is a fear, as you rightly put it. But the only question is whether it's going to subside immediately, and it doesn't look like it's going to subside immediately. And given the fact that structurally still the supply side constraints are there, therefore if the commodity price remains bit an elevated level, then we'll have to start looking at beyond geopolitical risk about the FOMC increase in interest rates led by inflation rising and so on and so forth.
Buying anything in this kind of a market, and this is not just in India, but equity markets across the world, would be like standing in front of a running train. So that's obviously not one would recommend to any investor, because for obvious reasons there is huge selling momentum. Last time when I was engaging with you on this channel, we were talking about the big risk of monetary policy tightening. Now this geopolitical risk has joined in. The extent of this geopolitical risk was unforeseen, possibly even about 7 to 10 days ago. At this point of time, we don't know whether this would spiral into a military conflict. But the most obvious reaction of investors has been to sell and get out and wait for clarity to emerge.
These kind of situations, of course, do offer extremely good opportunities. It's just that you have to decide when, and we are right now in early stage of conflict. We'll have to wait and watch what kind of situation turn it takes. So, our approach is that right now just watch the events. It's not that one is sitting on a lot of cash and no one can deploy. So if one is looking to invest, any new investor, they should just wait. And of course, this opportunity, whether it is in a week from now or 2 weeks from now, will be an excellent opportunity to invest, because these kind of events only do offer when markets are fearful and uncertain long-term opportunities, and we have seen this multiple times over.
Because I think the markets are likely to fall further, and this depends on whatever we are seeing in Ukraine. So how much of a fall can happen? I think if we have a Crimea type incursion, not a full-fledged war, then markets can fall 5% from the current levels. If we have a full-fledged war, invasion of Ukraine, where nobody wants that sort of a situation. Not even the Russians want that sort of a situation. We are likely to see a 10% downside. So India is a buy story. It's a given, But what happens is this whole geopolitical tensions are overreacted upon by the markets. We have seen all of that during the Gulf War also, where markets actually fell 15-20% and then rose above the pre-Gulf War levels within a period of 6 months.